All right, what's up, guys? This is Power 3.88. Today is March 31st, 2021, and in today's broadcasting, we're gonna, as usual, we're gonna go real quick through the to see like what's going on for the market and some of the news, and also some of the major news like going on in the market. So let's start from the market conditions here. Um, as we can see, uh, Nasdaq has been is like has surged a lot. I mean, it's about surge about like a 1.7% today so far. Mainly due to the Biden government's new policy regarding the 2.25 trillion stimulus program for the infrastructure plan in the U.S. So this is adding a lot of power to the Nasdaq, the tech sectors, while Dow is around at the even of the open price, and S&P 500 is up around like a 0.6%, and crude oil is up around like a 0.6%, mainly for the Suez Canal events going on. So I think like later on we can spend some time to talk about the Biden government's new policy about the infrastructure plan. But before that, I think there is another terrible event going on, and since last Friday, and we just talked about that like 2 days ago about Archegos hedge funds meltdown, about Archegos hedge funds sell off, and what's the ripple effect just like going on for. I mean, I have like read some like English article as well as a Mandarin article. So I'm like getting the information not only from the media in US like Reuters, Wall Street Journal, Yahoo Finance, etc. But I also got some information reported from like Hong Kong, Japan, etc. And somehow they kind of like they discuss these events from different aspects, and they disclose kind of like different truth or different part of the entire truth of this event. So let's just have a quick look to see what has been reporting on Google search. So we can see that what is Archegos and how did it rattle the stock market. What is Archegos and how did an Archegos linked stock advance as fallout fears ease? That's a good thing. So, I mean, which means like so far Archegos meltdown hasn't impact or hit the market too badly. And some of the major stocks affected by Archegos are like coming back, which is a good thing. And so in the Google search engine, you can also see that Archegos Capital blow up. What investors need to know. how banks responded to Archegos margin call, how Archegos Capital bypassed U.S. regulation. This is according to Bloomberg and CNBC. And it also said Archegos banks discuss cooperation to head off selling. Yeah. So I think this is from Financial Times, and I think that's one of the topics we can pay attention to. It says before the things last Thursday, before the Archegos meltdown and sell off on last Friday, the CEO of Archegos, Bill Huang, actually congregate a meeting with all the major banks like Goldman Sachs, Morgan Stanley, Nomura, Credit Suisse, Deutsche Bank, and so on to have the meeting. In the meeting, they're trying to find out a way to resolve the problem without hurting the market and each other too much. But on Friday, like the two banks started selling off, started like avoiding the loss are Morgan Stanley and Goldman Sachs. So in the end, I mean, like the event is still going on, but until so far, like Goldman Sachs and Morgan Stanley stock price drop around like 1 to 2%, and while Nomura and Credit Suisse has encountered a very bad drop around like 20% of their share price. So I mean, can you tell the difference between the two types of bank? I mean, I just have some thoughts after research and reading the news today, and something just come to my mind that I mean, it's another game about law of the jungle. I mean, law of jungle just like theory everywhere, and also in Wall Street, in capital market, I think. I mean, in the past couple decades, I think like whenever there is a bad news or like a crisis happen, usually those like biggest giants survive and or make better profits compared to the weaker one. So in this whole event, I mean, at least until so far, I think like Nomura and Credit Suisse just had a nightmare, while Goldman and Morgan Stanley kind of retreat safely so far. And yeah, it's the law of the jungle. The weak are always the prey of the stronger. I mean, not only for those big boys, big banks, not only for those institutional investors, but also the same thing for all the retail investors. Just like the very surprising event like a GameStop, like AMC, happened from this February. And although like we can say that in the GameStop events, we think that retail investor finally just beat institutional investors, just beat those short selling hedge funds. But there are a lot of retail investors participating in GameStop, like share trading in the past 1 to 2 months, and I would believe that only a small part or just a small part of those retail investors eventually make a good profit, while most of those retail investors participating in GameStop still lost. I mean, so it's a law of jungle. I mean, so in every law of the jungle, once again, we have to keep in mind that we need to have a good mindset. We don't be greedy. Don't have too much bad desire. Don't chase the don't chase the desire of greed. I mean, just do good things and keep some like positive hope in our mind and be conscientious, being ethical, and then we will have better chance to survive in the capital market. So yeah, I mean, let's go into the next article. I mean, as I just mentioned, you can see that Goldman, Morgan Stanley limit losses with fast sale of Archegos assets. This just started selling off on last Friday. I mean, after a meeting with all the other banks. So the other banks were just like stupid. Just like, dang. And yeah, so you can see like Goldman, Morgan Stanley limit losses with fast sell. And they quickly curb losses. Okay. And I think that the loss and the share price drops, the difference between Goldman, Morgan Stanley, and Nomura and the Credit Suisse are just I mean, unbelievable. It's like about like 1 to 2%, and another side is about like almost like 20% of stocks drop. So I think the 20% of stocks drop from like Nomura and Credit Suisse. I'm not sure if this will have some like a further ripple effect to the financial market, to the global financial market. So we still need to keep a close eye on this event. We can see here, Credit Suisse bid to head off Archegos crisis and with rival. So yeah, it's a nightmare for Credit Suisse, the European bank, and Nomura, Japanese bank, and the big boy from Wall Street, Goldman and Morgan Stanley just played the game nicely. So I mean, please allow me to have a guess or skeptical guess. I think like just based on my working experience in the past 10 years now, from like New York and Hong Kong, I think a lot of the time, is it just something that we can see on the news? I mean, behind the curtain, behind the screen, I mean, what are those facts? What are those scandals might be going on? I mean, like, I just making a guess. I don't know. Is it possible that like the CEO of the hedge fund manager Bill Huang just have a plan, just have a scheme with the Goldman and Morgan Stanley, and then Credit Suisse and Nomura just got cheated, just got betrayed. So I mean, a lot of the profit share behind the screen. So who are the winners? So who are the losers? We will never know. But as the just the general public, as the retail investor, a lot of time we can just like sit in front of the TV and the computer screen to just like silly innocent kids, like silly innocent kids watching the like a comedy or like a cartoon or something. So I mean, I'm just making a guess. I have no idea. So that's the news has been going on from last week until this weekend. We still need to keep a close eye on to see how that will affect the market and how that will affect our trading and investment. So let's just also have a quick look over the report. To check the video from Yahoo Finance about the Archegos.
We got to talk about how regulators are navigating this as well. And some of those banks were summoned to a meeting with regulators in the wake of who are the regulators that we should be watching here, and what could they potentially be targeting?
Well, Julie, the reporting coming from Bloomberg that the Securities and Exchange Commission, in addition to the Financial Industry Regulatory Authority, or commonly known as FINRA in the space, had some meetings that kind of tried to dig a little bit deeper into the mechanics of what exactly happened with Archegos and whether or not this could be spreading to other parts of the financial system. We don't know the details of those meetings. We don't know even more specifically who was part of those meetings, but it does show some interest from the part of at least U.S. regulators to try to figure out what exactly happened in this case. Now, there are a number of other regulators that could get involved. Obviously, this is a global story when you think about the involvement of both Credit Suisse and Nomura, but you wonder here in the United States if a body like the Financial Stability Oversight Council, or FSOC, could get involved. Obviously, Janet Yellen, the Treasury Secretary, the head of that Justice League, if you will, of regulators, which includes the likes of the Federal Reserve, which is the large bank holding company regulator in the United States, in addition to the SEC, the CFTC, the FDIC, and a number of other alphabet soup of regulators. So we don't know if the FSOC has had any sort of kind of conversations on these things, but when you consider that this is a non-bank issue, that could be something that was in the purview of the FSOC. So a lot of questions here about how regulators will approach this. One possible way they could attempt this is through changes to the SEC filing infrastructure. So there's a lot of questions about how this particular family office run by Bill Huang was able to skirt some of the regulatory disclosure requirements by engaging in swaps as opposed to outright purchases of some of these stocks. When you think about Viacom, CBS, or the other Chinese stocks that this family firm had large holdings in, whether or not the SEC could try to change the reporting requirements under, say, the 13F form could be in view as well, Julie.
Okay, so that's about my quick report about Archegos event today, and yeah, I mean, just if you are like watching the broadcasting, if you are watching the video, please give me a like down below. Please give me a subscribe down below. So and also, if you don't mind, please spend like just 10 or 20 seconds to give me some comments and or something that you know about all the scandal, manipulation, conspiracy theory from like Wall Street and from the market, so that we can have some discussion further. Okay, I mean, if you don't give me a like or subscribe, or there's no comments, I don't know how to interact. I mean, you know, so please just for me, give me the like, subscribe, and some comments, and we can discuss some of the scandals and manipulation and conspiracy theory you know about Wall Street, you know about the market, you know like what we can discuss further. Okay, so we can help each other, please. And then I'm going to share. I mean, other these events, I'm going to share some like information that I just heard from one of my friends in a major private equity funds in Hong Kong, and he used to work in the U.S. in Wall Street as well for some like investment bank, and he just transferred to Hong Kong in recent year. He just shared to me some like very useful investment social like investment research websites, and there are 3 websites, and there are a lot of experts from not only Wall Street but mainly from the buy side, not only from institutional investors but also retail investors, day trader, and they kind of like change their experience and thoughts and strategies on these websites, and I think I just spent a little bit of time on these three websites so far, but I will spend more time to see like how we can use this website to kind of like favor our investment and trading going forward. So yeah, let's just take a look. There are three, and I mean like later on, I will I will also post the web link and the email and the web address on the description down below. So after you check like and describe button and making some comment, you can go to see like the address of the three website, which is should be very useful for your trading and investment, I think. Okay, so the first one is this. Just a second, please. Okay, so the first one is the Motley Fool. The Motley Fool. I think a lot of the professional investors in the U.S. have been or already have the information, or you already like going after this website for a long time, because this kind of like informational social website has been up for like about like 10 to 20 years. So in this website, Motley Fool, we can see there are a lot of opinion from the expert, and they have a lot of like IT and big data techniques to kind of like filter and organize to let you know what are some of the latest stocks pick here, and some you can also have now a lot of information about investing basic, like how to invest money in stocks, in index fund, ETF, or how you can choose your broker, and then also like stock market 101, and it's very educational. It's also informational and comprehensive. You can have a lot of useful information on this website. So let's take a look at the wiki of the Motley Fool. So the Motley Fool is a private financial and investing advice company based in Virginia. It was founded in July 1993 by co-chairman brother David and Tom and Eric, who has since left the company. Its main business is online subscription service with investing recommendations, stock research, and analysis. The company employs over 300 people worldwide. So later on, you can just check into this further. This actually recommended by one of my very respectful friends who got a very extensive experience from Wall Street to Hong Kong as a like a investment banker as well as a private equity fund manager. So I think his recommendation would be something. I will check into that. And the second one is this: Seeking Alpha. Okay. Seeking Alpha is kind of like the function of Seeking Alpha are kind of like different from Motley Fool, but the major purpose is kind of the same. It's to help us to manage our investment portfolio. And there are also a lot of like tracking and AI function that we can use to link to our currently used brokers. So yeah, it's a very good investment research and asset management website. It's very good tools for us to use. You can like later on, like after entry level usage, if you like, you can just subscribe to become a premium users. That you will be. I mean, I understand that like if we cut like the whole investors population into 5 major parts. I understand the top 2 levels are those like professional investors and institutional investors. They would never spend any time to check like YouTube or like a TV to consider their investment trading. But the lower 3 levels, which are you and me, and yeah, as a retail investors, we need to help each other. So this is I think it's very helpful for us. Besides like checking on YouTube, Facebook, TikTok to make investment decision, I think the information from these websites are more professional and also easy to understand and helpful. So yeah, please, if it's possible, please spend some time on this website and come back to me and give me some comments so we can discuss further to see like what kind of value you actually find and take from this website. So Seeking Alpha is a crowdsourced content service for financial markets. Articles and research covers a broad range of stocks, asset classes, ETFs, and investment strategies. In contrast to other equity research platforms, insight is provided by contributors, including a base of investors and industry experts, especially from buy side rather than sell side. Seeking Alpha was founded in 2004 by former Wall Street analyst David Jackson. So when you get on like a TikTok, YouTube, and the Facebook, you always have a lot of like just scam, just fraud from or you got a lot of like hard selling, useless hard selling from those brokers and from those like sell side. But in Seeking Alpha, in this website, you will have more meaningful and useful and helpful information and knowledge, I think. So in 2011, the company stated it had distribution partnership with MSN Money, CNBC, Yahoo Finance, MarketWatch, NASDAQ, and The Street. Although Yahoo Finance ended its relationship with Seeking Alpha in 2014, as of January 2021 this year, the firm had 10 million registered users and attract over 17 million unique viewers every month. So you can see this website, Seeking Alpha, is literally running professional and the meaningful with like such a like good amount of client and viewer base. The Seeking Alpha's average visit duration is 4 times more than Economist, Barron's, or the Wall Street Journal. So in the past, like traditionally, people like those professionals spend a lot of time on Economist, Barron's, and Wall Street Journal, but now the Seeking Alpha is beating on them. So this is definitely the website you need to check it out, please. Seeking Alpha. And if it's helpful, don't forget to come back to my YouTube channel, Borrow 3.88, to give me a like, to give me a subscribe, and also make some comment for us to discuss further, okay? And the third one is Value Investor Club. Value Investor Club is more like technical, I think. That will ask you to provide some of your investment and trading strategy in order to exchange with the other expert in this website. So I think it's upper level in terms of entry level. So after using Motley Fool and Seeking Alpha, if you still have more time for your investment and trading, don't forget, come to valueinvestorclub.com. And I'm also posting this address on the on my video subscription down below. So yeah, I think that's pretty much the things I want to broadcast and share for today, March 31st, 2021. And I mean, like, this is the, I'm still like testing on the trial for my channel. And I'm still looking for a best way or best like a formula to kind of interact with the audience or share with my past working experience as a good YouTuber or reporter. So if you don't like me, it's fine. Just give me a comment as well. Say fuck you or something. If you like me, please give me a like. Otherwise, my video just shut. Otherwise, I mean, please let me know if you like or don't like, or what are something that I can improve or provide. Okay, so we can grow all together. Okay, we can improve all together. Okay, during such a disastrous time. So please give me a like and subscribe. Don't forget. So I'm looking forward to seeing you and sharing more. Until next time, check it out.